Hello and welcome to NDTV Profit. You're watching IPO Adda, and the company coming out with an IPO next week is Azad Engineering. It's a manufacturer of high precision tools and equipment for the energy, aerospace and defense sector. And joining me is Mr. Rakesh Chopdar, who is the chairman and CEO of the company. The company's IPO is opening on December 20th, closes on 22nd, price between 499 to 524 rupees a share. The IPO consists of 240 crores of fresh issue and an OFS of 500 crores, so it's a 740 crore IPO which is there, and the company is valued at 3,097 at the upper end of the price band. Rakesh, thank you very much for joining us on NDTV Profit. To begin with, you're raising 240 odd crores in fresh capital. Can you take us through the use of proceeds to begin with?
Hi Sajid, good morning. Thank you so much for your time and thanks for inviting me to this channel. Very happy to inform that we are going public, and the issue size is 740 crores and the fresh issue is 240 crores and the balance 500 is around for the OFS. So 240 crores is primary to be utilized in the plant and machinery for the future growth, and the OFS, we have current investors, and I have some portion is for me myself. So that's very basic about the size of the issue.
Can you give us a sense of the operations of the company, the business model of the company?
Yeah, so Azad Engineering, established in the year 2008, with a very humble background, with just one machine, and the self-operator on that myself, and it has come this long journey of 15 years. Today we are in around 300 machines and manufacturing the most niche products for the very niche industries in the verticals of aviation, energy, oil and gas and defense. When we say the products are niche, they are very niche, very highly engineered critical components which are project critical and life critical. These components are 3D product, which we can, it falls under, especially in the essentials, falls under essentials, like we have for the power generation, widely used. So these turbines are widely used on three verticals: is land, aviation and space. For the land, majority it's used for the power generation, utility, oil and gas and mechanical drive. And in aviation, we widely used in the commercial aircrafts and the military aircrafts. And space, we have the launches, which is we see the launches coming up. So our product plays a very vital role in the compression section of the turbines, which gives the thrust in the aviation. The thrust is used in the aviation industry, and for power generation on the land based, and for the launches in the space.
I was looking at your RHP, airfoils and blades for energy segments constitute nearly 72% of your revenues.
Yeah.
You are looking at other segments as well, which is aerospace, defense and oil and gas. How are these new areas that you have entered into lately, and how much time will you take to scale up in these segments?
Yeah, see, Sajid, when I say these parts are life critical and project critical, so it takes a lot of time for these parts to get approved, to qualify and to supply to the large OEMs. There are very limited OEMs in the world who have, this capability of producing these engines. So when we say life critical, every product which is utilized in these engines are rotating. These 3D products are rotating parts, which plays a very important role, right? And when it's life critical, and the acceptance criteria is very high for this, right? The qualification timelines are very high. So getting those approvals from this large OEM takes a massive amount of time, OEM by OEM, model by model, product by product. So it took us 15 years to cover up the the entire session of getting the qualification status.
So does it also give you an
so that we did in the energy.
Yeah, I'm saying that does it also give you that leeway of,
Sorry?
does it also give you the leeway in terms of, more specific orders and long-term supply to your OEMs?
Sorry, Sajid. Can you please repeat the question?
I'm saying that does it also give you the leeway and, advantage of being a long-term supplier to your OEMs?
Yes, yes. So the stickiness is such, when an OEM spends so much amount of time in qualifying you as a company and the product, okay, being a company in India, getting in this level of high precision parts and catering to the, taking approval from these large OEMs. So when we say that when India could come to the level of getting these parts, so the equal amount of time is being, spent by the OEM to qualify any company, whether it's India or China or anyone, right? When they try to qualify you as a company and the timelines are so massive, it takes so much long, so they will just not do it for a short term. They have something long-term planning so that they don't just switch for just a small portion of cost. So example, there was a last supplier who was, coming where we don't know how many years before they got qualified, and they find a new supplier in India. So they continue with the supplier for maybe a decade, 2 decades. We never know, because finding a supplier, spending so much time, spending so much resources, having such timelines of this qualification, they just don't leave you just like that, They try to take up all your capacity for long term. Because the time and resources are spent, which is very, very, it gives a lot of resources, cost and money. So they can't do it every now and then.
Okay.
So the stickiness is very important, and they stay with you for a long-term contract as well.
Your customer concentration is very high, I think, because of that, because your top customer accounts for nearly 21% of your revenues, top 3 constitutes 47% of your revenues, and top 5 constitutes nearly 60% of your revenues. So is there an attempt to diversify this as well, because this client concentration risk is also a risk going forward, right?
Yeah. Yeah, Sajid, if you deep dive in this industry, if you talk about these engines, these turbines, they're very, very sophisticated, highly engineered product, right? There are very few players in the world who are producing these kind of technological, parts. Now, when we talk about, there are only few. So, example, we talk about the aviation industry. There are only duopoly. This Airbus and Boeing. They cover the 91% market of the market. So we can't say that we have only two customers, because there are only 2 available. Similarly, when you talk about these engines of this aviation, there are only few handful. When you come down to the land base, there are only few handful. So when we talk about diversification within as customers, we only have those limited. That's the only world is available. The customers that is there, they are the only availability we have. When you talk about diversification, we have to diversify from aviation to energy, energy to oil and gas to defense. That suits well. That diversification is what we term it. But what Azad has done over the years is, they started with energy, same field of the engines being there in the aviation, similar field of products which we took in the defense, similar field of products we took in the oil and gas. So we never left the legacy of, the class A parts what we have been doing. As we told, the life engineered, highly, life critical, highly engineered part. So we have always focused on where a capability is required, where a strength is required. It's not just that, we have, okay, one more very important point, the products what we manufacture, there is no ready-made technology available, right? So we have to search the technology, we have to use, man, machine, tool, process, methods. It's a very rare combination of all these 5 things, which has to, sync perfectly to get this part out. Okay, it's not just kind of a simple forging or a simple precision machine where you can just go buy, you have money, you go buy technology, you have good connections, you get work with all the OEMs. But when these OEMs come in, of auto sector or aviation sector, there is a range of difference. There is a range of difference on these, how exactly every industry works, how important that product is for the human life, I would say. What I say is when we call it as critical, life critical. So these components play a very important role. When a 3D product, which is rotating in the engine, and you are at 30,000 feet, and when you have a very critical power lines which are very essential for the human being thing. So these aspects are fully considered, not just price. But whereas in other industries, other sectors, price plays an important role. Of course, technology is required, but price also plays a role. But in our industry, it's not just price. It's the capability, it's the ability to handle such parts, produce it consistently at a cost. So these kind of rare combinations are very difficult to find throughout the world.
Rakesh, I was looking at your financials. In FY23, you had a top line of 251 crores, and H1 of 150. In H1, you had a top line of roughly 159 odd crores. I think your EBITDA margins are one of the highest in the industry, if I'm not wrong, 33.1% in H1.
Yeah. Are
these EBITDA margins sustainable, or is there enough room for them to go up from here on?
Yeah, Sajid, good question. If you really try to see the history, and also please recall my statement, what I mentioned is there are no set processes to produce these parts, right? So the raw material cost plays a role, but the major cost is the value add. The value add which is on our floor. Azad started in these initial years of 2008, 2009. The EBITDA levels which we were at were from 12, 15, 18. I'm just giving you a nearby number. I'm not giving the exact number. It's like from 12, 15, 18, 22. So over these years, we have grown. We have grown the EBITDA. Means that gives a message that we have improvised the processes. Please to remember the 5 things which I mentioned. These 5 things plays very important role in getting you the playing an important role in the EBITDA margins what we are securing at the moment. So this is a proven, I would say in our language, it's a proven EBITDA what we are talking, and there's always a scope of going on the higher side.
Also, in the profitability point of view, since you are into a high precision equipment manufacturing, how do you manage the raw material cost which is there? And does your agreements account for pass through of this increase in raw material costs?
Yeah, see, the best part is, again, very regulated industry we work with, very high, entry barriers to break with. So it's not just us as a product supplier, it's everyone who's related to this industry. If an engine is manufactured, it has got so many parts, and every part plays a very important role. Now, the most important is the origin. The origin is the raw material. So when the OEM takes so much time to approve companies like us, which are manufacturing these high critical parts, and these high critical parts has a base of raw material. So that raw material also plays a very important role. So what happens is, like OEM has qualified us with a very lengthy process, same thing, they have qualified the raw material manufacturers as well. So it's the raw material we have to go and buy from only the set of companies which the OEM has approved. That means we have no choice. We have to buy raw material only from the companies where the OEM is approved. Now when OEM is involved and we have to give a bid, so they give us a list, okay, supplier A, supplier B, supplier C, this country, that country, this country. When we take a bid, we are the raw material price, we make a quotation, we submit it. Now when we tell the OEM, look, you're signing up for 5 years or 7 years or 10 years with us for these parts. What if your supplier increases the prices? And that's my base. So that's a very, very standard question, because all three knows what the raw material cost is. So we tell the OEM, look, for 5% on all these contracts, we bear the plus minus. I mean, we will absorb the 5% up price, or and above 5% is that either you please ask your supplier to reduce the price, or you give us an increment. So that's agreed. So we have a risk of 5%, and that's I think very, very reasonable.
You're setting up 2 new facilities in Telangana. one being in Tuniki. Can you give us a sense of what kind of these facilities are, what kind of capacity these facilities bring in, and what kind of, which is the client that you are addressing it with?
The existing facility, you're talking about existing facility, right?
I'm talking about the new upcoming facilities, 2 facilities which you're working on.
Yes, the upcoming facilities, Ajit, it's see what I would say is the parts in energy or aviation, as I mentioned, it's a very stringent, very lengthy process to get qualified, and it's part by part. It's not a family, part by part, model by model, OEM by OEM. So as you finish the qualifications is where you get your production orders. If you don't qualify, you don't get your production orders. You don't get your production orders, you don't get revenues. And revenues straight come from the capacity. Now, all these years, what Azad was very successful in doing is to qualify this. Every OEM, we picked up all the engines, we picked up every model, we picked up every part, and kept on doing qualification and balancing our revenues as it. If you see, there's a large TAM available, right? And the revenue for Azad is so small compared to the TAM what we see. So it's not that we can just ramp up the capacity, because unless you don't qualify, you don't get production orders. They will not get production orders. And what do we do with the capacity after installing? So all this hard work of 15 years now has created a runway. If you ask today, every customer, we are less than 1% wallet share of the capacity. Now is the time where we really need to, the upcoming facilities, which is just going to, coming the wallet share. It is the incremental of the wallet share. So that is going to drive the capacity, or that is going to drive the new facility. So it's up to us how much wallet share we have to take.
How big is the capacity, and what kind of revenue? I understand that the Tuniki one is meant for the Mitsubishi heavy industries. So do you have a visibility of the kind of orders that's expected from Mitsubishi going forward, so that because of which you are dedicating a facility for them?
Yes, Sajid, it's like this. As I told, the major business, the major market share of the energy on the land-based turbine is controlled by 3 large companies, GE, Mitsubishi, and Siemens. And when we say we are a single-digit wallet share, right? And this single-digit wallet share is not enough, because we compete the rest of the world. We compete rest of the world, and the OEM has huge benefits working with us. So the first priority is OEM has qualified us. Now is the time to, take measure of the output from companies like us who are competing the rest of the world and having the best product quality. Again, in our case, capabilities first, and then comes the price. So both ways we become stronger, and the OEM would like to work with such suppliers or such partners always, right? So when we had a very limited capacity, and the expansion growth headroom was discussed or shown, and as I mentioned, we are just 1% less. So as we add capacity, as they come to know, right, comes from something, capacity has been added, they just come and block it. They say, hey, this is ours. This is the long-term plan. This is what it is there. This is ours. So it's a strategic decision. It is not order to order. It's a strategic decision by the OEM and us. And this is what the long-term agreements are in place.
What is
based
the total,
on that, capacity is assessed.
What is the total order book that you have?
Order book, what we have today is around 2,000 crores.
Spread over how many years?
And these contracts are between 3, 5, and 10 years.
So I was asking that, you have a borrowing, you had a total borrowing of 154 odd crores. You are repaying roughly around 138 crores from the fresh proceeds. And you have 2 facilities which are in the pipeline. Do you have enough cash flows, free cash flows coming in from operations to fund the entire capex?
Yes, so it's out of 154, we have we have a cash balance of around 52 crores. So the net, we can say it's around the, if you see, it's mentioned as around 89 or 90 crores. I don't know the right number right now. It's not on the top of my head. And it is a facility which has to come as the investments, the whatever is being deployed. It's not overnight. It takes certain time. So the plan is to invest in that the primary sum on the facility and to add capex. So this money, what is required for us, will suffice for the next plan, and we of course have the internal accruals.
Finally, I was looking at your trade receivables, 133 odd crores. What is the kind of policy that you have for trade receivables, and is there a way you can reduce it going forward, since your customers are marquee in that sense? Why is there a huge amount of trade receivables?
So we are working on that, Sajid, because these OEMs, they have their own payment terms, and we have been talking to them, and it's that we just can't negotiate much with these guys. So they have a set standard payment terms in which we have requested for a long this thing. So they are trying to help us out in kind of to set up this large receivables. So what we can see is they are trying to help us by doing some kind of factoring, or that discussions are going on, and it's well addressed. So maybe in this quarter or by next quarter we may find a solution for this.
Rakesh, it was a pleasure talking to you today. Your IPO is opening on December 20th, closes on 22nd. Price between 499 to 524, fresh issue of 240 crores and OFS of 500 crores. That makes the total IPO size of 740 crores. Yeah. Thank you very much for joining us on NDTV Profit and on IPO Adda. Thank you for watching.